Welcome back. Today I'll be talking about the micro E-mini daily chart, what I see playing out for the current week, and just some things I will be watching. I'll talk about some stuff that happened in the previous week also, and then how I engage with price, and we can get into it. So here is just the daily chart of the NASDAQ 100 futures contract. And these are just some soft layer of levels that I have on my chart. Of course, this suspension block, right? We've just been banging into it repetitively over the last couple of weeks, which is cool. That can happen at an inefficiency on a daily chart. The next thing that normally comes out of this, though, is expansion. So whether that be an expansion higher or expansion lower, will be something that will be to be observed, and then within that observation, you will look for prices back inside of the range that it's trading into for those targetable levels on the downside. Now, the March contract is set to end on the 20th, but you have to check the bar chart to look at the open interest in the volume to see which one has the most, and then that would dictate your change into the current contract should it come earlier or later than expected. But daily chart, and then what I'm gonna do is I'll drop down to an hourly chart so you can see that suspension block and how I have that drawn out in time. And then you can see this was the new week opening gap here, and you can see us trading up into that suspension block a couple of times, and then using it to either use it as an upside target or to trade off of it to then trade lower. Those are also coupled with, again, those 1 hour false small little fair value gaps right here and right here that we saw price want to also couple for the opportunity to trade lower. Now, what I would say is, yes, that there were moves, but the moves may not happen at the time that you normally sit down to trade. So if you trade the 9:30 open like I do, there was movement at 9:30, but like there were probably like 2 clean days for price action for the setup that I trade. So one of those days I did hesitate, and we can get into it. But and then one of those days I executed, and other than that, I didn't really see anything that I liked. And this was the first week where I only took one trade, and I had to sit through 5 days of not trading to only execute once, but I saw two. So very boring, but very disciplined. And I'm learning that being disciplined is boring, which again in this game is the I guess you could say the outcome of probability. So this is my naked chart. This is my executable chart. I just like to have it blanked because I already know what I'm looking at. Again, if we do trade lower, we got these equal lows that we could trade to. O low here, and then on that daily chart, I graded that wick. There's a volume imbalance there. I grade that wick, and then I use these equal lows as the downside target. So that's something that I have on my chart as I reference multiple monitors to look through and see where we at those levels. What are we doing at those levels at this specific time? And then are we reaching for lower levels or higher levels? Is it clean price action? Is it targetable? Can I enter? Does it frame risk? Okay, let's take it and let's see how we operate in that as a take read exercise. Let's drop down to the hourly chart here. All right, boom. As again, I was saying, if you did not have that suspension block on your chart or as a higher time frame objectives, these lower time frame ones here are also still valid to the eye. So I don't have the suspension block on here because I understand that this is still a SIBI and this is also a SIBI. So price can want to trade up into that as upside targets, and that also that area too, since it is a premium of the current range. So if you took just from the displacement from that current range high to that low, right, anything above here is a premium. So price will want to see some type of sell-offs there, or you can look to target some things up in there. So this was Wednesday here. This was pretty clean, right? It was pretty clean. It started off as a little shaky in the AM session at 9:30, but I can show you how that should have been deciphered. To again, if you're only looking at price, you probably only see it like that. So this could be a target, and then you would want to target these premium SIBIs that I just said that we can retarget as upside objectives to trade into or trade out of. So again, on Wednesday, the charts look like that prior to 9:30 open. After we ran the sell side here, smaller fair value gap there, traded there. We've already shown that we have a willingness to want to respect discount PD arrays, right? And we're looking to trade higher. So logical targets will be this high, these equal highs, really. This old SIBI here, come in and want to fill that in, and then this SIBI here, possibly want to trade up into that. And that's all you need for a day trade. That's all you need for a session trade. So 30-minute chart. I kind of overlooked this just a little bit, but so I don't know how, but I did. So there's a fair value gap here on a 30-minute chart. Let me zoom in for you. So this fair value gap here, boom, is what we were trading down in at 9:30, right? So we know these equal highs, target, SIBI, target, and this old SIBI above that one, target. So we have upside targets, right, with price respecting discount PD arrays. So whenever price is respecting discount PD arrays, it's obviously want to continue to reprice higher to a premium PD array. And to that premium PD array then turns the market and want to go back another way, whether that's repricing to an inefficiency or running some type of liquidity. But for this instant here, we're dropping down into a discount PD array at 9:30, right? Which again, at 9:30, I'm looking for one-sided price movements. I'm not looking for high resistance liquidity run. I'm looking for price to be ran by a certain time. So I have time-based, what would I call it? That's a good question. I have time filters. So if price isn't doing something by a certain time, or price is doing something within a certain time, and it's not doing what I would like for it to do at a certain time, and that's being one-sided, low resistance liquidity runs, running for targets, then I'm not looking to engage. So this day started off a little wonky, and you will see why. But if I were to just carry out this SIBI and understand that this SIBI at this specific time, which I know, but I just didn't have this. I didn't have these levels all the way transposed. Like it was real naked. I just didn't trust it. I'm gonna show you why. So to show you what it looks like on a 15-minute chart. So that's that. A 5-minute chart is here, right? And then the 1-minute chart will be the executable chart. And that is here. So let's go ahead and actually no, let's just keep it on the chart. All right, so here's a note to myself. So I went back and I back test. I just want to make sure this don't say nothing too personable, but it says great job identifying it. Look to qualify it more with how the 30-minute would have gave you conviction to trust it. That's a typo. What it meant to say, I'm not intimidated. It says I'm not immediate. Ha ha ha. Okay. In, what is it trying to say, sir? honestly, I don't know what I was trying to say. But still price wrong with the media side. We don't care. You can only manage. All right, and then at the end though, I was really just talking to myself about the winning the feeling you get right before you take a trade. It's like this feeling that that makes you not even want to get in a trade. Like the whole time you're looking at the charts, you'll go the whole session looking at the charts, and you know you don't see nothing, and then your actual setup appears, and it's like this feeling, like, damn, that's it. But I'm gonna watch it. I'm gonna see if it's really it. Like, but that feeling right there, as soon as you get that, take the trade. Sorry, don't take the trade, but paper trade it, right? Because that feeling right there, that's the feeling you got to get over, and then understand too, you're gonna lose trades. Just understand what the average is of what you lose. So like, if you got $50,000 account and you're losing $1,000, you're really only losing a small percentage of the trade of the account. And then over time, you'll track it and you'll see, okay, well, on average, I lose about $1,100 a month. That's like my average loss. But I make such and such, such and such, such and such, such and such, and it cancels out. You're gonna lose trades. It's just the wins is the ones that cancel out the losers. It's obvious math, but like as a neophyte, you don't really think like that a lot. So, excuse me for my mishaps on reading the note too. Just giving it to you officially, no edits. So again, this is a 30-minute fair value gap that we delineated. 9:30 we traded. 9:30 open, we traded down into it a little bit, traded higher, traded back down. It was real wonky, but you gotta think about it. There's no true one-sidedness in this at first. Right, we're just banging around in that 30-minute, and this is how I'm currently seeing price action. Boom, I see the fair value gap there. Okay, but I see this one also. So I'm like, okay, does it go to there, go to that one, and then go lower, or what? Do we come back in this one and then we go higher? Do we trade through that one, treat it like an inversion, and then start the price run lower? So I'm watching. Boom. It gave me that. I saw the swing low. It gave me that candle. This candle right here. So like with fair value gaps too, it's the firm ones that you desire the most, right? You gotta just know, like, you can't get caught up in the small ones. You can't get caught up in the ones that you're trying to like force to be one. You gotta get caught up in the ones that are firm and they have framework to them already, right? Because I can show you multiple examples of a fair value gap not working, and I can see how you can get caught up in it if you don't understand direction and framework. There's all type of fair value gaps in the market that get literally ran through. You gotta just know how to pick the right one, and it starts with narrative, of course, and framework, right? So you would notice that a lot of my entries have the same framework. Boom. So here, fair value gap, swing low, drop down into that, stop below the swing low, 2-to-1, right? And it's like, okay, well, how do you know that price is going to trade higher? Well, what did we just do? Let's go back out. 30-minute. All right, so maybe on that 30-minute chart, we was already trading down into the fair value gap here on the 30-minute chart. So price looked like that already, right? Buy side here, layered buy side here, SIBI here, market conditions is consolidation, right? So let's just look at it from having the suspension block on also. Prices here. So we already know we've just been banging around in that suspension block. So we was already here. So the suspension block is up here. Layered buy side is up here. Those lower time frame. So you got a daily level overlapping with lower time frame levels, with market conditions, with order flow, which then gives you the execution that we were just talking about here. So this was a very smooth one, honestly. Just didn't execute on it. I didn't trust it enough, and I don't know why, but it won't happen again. I promise you that. Right? Perfect. Nest egg. Firm. Swing low. Execute. Stop. Don't care. We don't care. Don't care if I get stopped out. Because I know on average I'm going to lose about $1,000. On average, if I'm trading one contract right now with my $50,000 account, my average of loss is about $1,000. So however you want to do the handles, how many handles I'm losing, you can figure that out by that right there. That's simple. But my wins outweigh my losses. As long as I know that I'm able to track how much on average I'm losing, I'm okay with taking those trades because I know, I just know like the average threshold that I'm going to lose is about roughly anywhere from 1,000 to 1,200. So take it because they're in there. They're already filtered in. It's already filtered in. It's already priced in. My losses are already priced in. And then again, 2-to-1. So again, I look to enter at the worst case scenario. I'm below the swing low. Okay, so boom, I'll be somewhere right there, and I'm 2-to-1. That was already smashed right here. Boom. Before we even got to the previous day or whatever this is, Monday's high. Before we even ran out that, again, market maker buyer model. Before we even ran it out, 2-to-1 was had off of a pattern that already frames risk, is repeatable, and the losses are already factored in. So I don't that's what I'm saying to myself, like I don't care long as as it presents itself, as long as I'm disciplined enough to only execute in that, with that logic, in that fractal, I'm good forever. So boom, that was that. And then I'll show you that same pattern again on here. So we got the price was targeting this. So on the daily chart, I'm not gonna do that. What I will do is, I just showed you guys this type of phenomenon, right? Running out the buy side. And then we know also too, in this area above is what? It is a daily suspension block. It is a 1 hour 30-minute fair value gap. So it's all of these layered inefficiency areas that price can want to keep banging up into as we consolidate. So if you ever go look at just a lower time frame, and you look at the lower time frame, if you look at price consolidate in a inefficiency in a lower time frame, you will see consolidation. You'll see banging around before we then continue to reprice in the direction that we want to price in. So the price is just doing the same thing. It's just doing it with daily candles. So again, this phenomenon, high, running out the high, market maker buy model, and then the entry mechanism that one could look to identify as a opportunity to execute in a paper trade. So buy side liquidity pool here. So this fractal here, think this fractal here. I'm somewhere in here. 9:30 starts there. So that's 9:30. I'll make sure I mark that out for you. Boom. So 9:30 is there. And then let's get into it. So we have 930 open here, buy side here. That buy side again is here. Low resistance liquidity run. Right? Cool. 930, we open, we trade higher, we trade back down. Oh, here goes a fair value gap, right? Put your stop below the low, right? You may get stopped out. So, framework, narrative, don't take that one. Leave that one alone, right? Take the one that has framework. The one that has framework is literally this one. Fair value gap, swing low. Take the one that frames risk at a time to target something. All right, this was something that you saw me execute on. And then I had one guy on TikTok. He asked me about just stop management. And I could talk through that too. So this one didn't go to the window. That is the only thing. But manage the trade, understand the liquidity, offers you an ability to get into the market. Boom. So as you know, I took this trade. I got stopped out. And what I was doing was I was just putting my stop below swing lows as we ran towards certain targets. And then the reason I did jam my stop up to this low, I wanted to see this act as a breakaway gap, and I wanted to see us just aggressively trade through the buy side liquidity. I didn't want to see a retracement to, because my stop was essentially here. So this is the swing low with the fair value gap. So if price would trade higher, it would naturally probably trade down into this and then want to go higher. My stop here, but my stop here was only like $20 in profit. If I were to move my stop up to here and assume that this was a breakaway gap, and if price going to run, it should run and leave this as a breakaway gap. If it does trade back down into all of this and then go high, I was okay with taking the existing revenue and banking that instead of playing another game of what if, because as we were up here, my target was like 223 or something, and up here was like at 160. So I'm $60 away. I could just bang that. I'm okay with being $6 away instead of losing the 120 and being like at $12. So like I had more to gain than to lose. So you see me rush. Once we got above here, I put my stop right below that low. I didn't want to see it come back into this, and ultimately I got stopped out, which was cool. That's just how it goes. So I hope this was informative. As far as price action for the week, again, we can trade lower, and then we'll be targeting some of these lows if we loosen up. If we don't loosen up, just expect range bound trading. So just expect what kind of been happening. Just some sessions may run, like you might have the Asia session that might be perfect to trade right now, or you may have the London session that may be the cleanest right now. And as a New York open trader, you got to be okay with that. You got to understand that you may only get to take one trade, two trades this week. That's super, super clean. Everything else in your session may be big ranges that don't make sense, like wide ranges, like Friday's price action, which will look like. And okay, I can show you the fair value gap too that I was talking about. Come on, computer. Like this right here. See this? This is. It didn't run. It's one-sided, but to me, that's not what I'm looking for. That looks a little chaotic, right? And I'm sure one can execute in it, but me, I'm not interested in it. So like, you may, if it's 5 days out of the week, 5 trading days, you may get 2-3 days of this, and then you may get 2 days of what I just showed you that was executable. and you got to be okay with that. Um, Again, and then it's funny because I was looking at this, and so what I learned was I love getting short, but I love getting short so much that I used to early on I used to like jump on them so quick. Like I was so eager to see them that I would the first fair value gap or the first swing low that was broken, I was looking to execute on it immediately. And I used to always get like price ran on me. But I was entering on logical stuff. So like I would enter on this fair value gap, SIBI, stop above the high that makes the candle, and then end up getting ran out. And the just taking those type of trades and losing those type of trades just helped me understand that it takes more to see price. I have to demand more whenever I expect price to go lower whenever we have already traded up in the beginning of the session. Unless it's like super already predisposed, like there's layered buy side liquidity pool and we run that and then we begin to trade lower or we reprice back up into a new week opening gap or an efficiency. But whenever we're doing like this, and it's like this type of market conditions, I already know like as soon as we start dropping back down, that's not a reversal. That's a retracement, and don't get fooled. And the only way it's like a reversal that may want to go lower, run out these lows. Then you need to get in the second stage part of it, not the first stage. So like if we were to do something, majority of the time I get caught up in that action. But what I'm saying is, if it is in fact short, because I love trading short so much, then I need to stop. I need to let it do the first stage, and I need to be entering on the second stage, and I'll show you what that means. So a return back into this, or even any of this range to then go lower, is first stage redistribution, which will look like that, right? But if we already are one-sided in the morning, and it's not no clear, already mapped out level that we can see a potential turn at, which is again any inefficiency, new week opening gap, new day opening gap, fair value gap, suspension block, higher time frame fractal down, or liquidity. Then whenever we're one-sided in the morning, whenever we start to drop down like this, I need to let the first stage accumulation happens, if it's going to happen. Redistribution, happen. Breakdown, and then get into the second stage of accumulation. That would look something like, essentially, what it did. It just did it way over here. So like this right here is that. Boom. So like in the AM session, if we do run higher and we break lower, normally majority of times, if price does continue to go higher, and you got stopped out, is because you're trying to enter in the first stage accumulation, and with no like true turn point, like true idealism on it. You know what I'm saying? So like a lot of times in these AM sessions, a lot of these price runs gonna be either one-sided and then give you an entry, one-sided, they're not gonna give you an entry. They're gonna run stop and then be one-sided and give you an entry. They're gonna run stops, be one-sided, don't give you an entry. Reprice to inefficiency, one-sided, don't give you an entry. Reprice to inefficiency, one-sided, and give you an entry. And then you're gonna have days like this, where it's just back and forth, high resistance, these, tradable things to someone who can trade in these conditions. But for the most part, it's gonna look like that. So you gotta just be real discerning in what you're looking at. But again, for those who, if this is you and you do this, if you see price either trade higher or lower from the start of the 9:30 open, and then you see a smaller retracement, and then you're thinking that is a potential market maker buy model or market maker sell model, just because you are heavily influenced by because as a trader, you either have 1,000% in buying and not a lot of confidence in selling, or you got a lot of confidence in selling and you need a lot more factors to undermine the fact of buying. So it's always that one-sidedness in this. Like, you could do both. Most of us who are great can do both, but it's always that one that you just super love. So you like, it's like a heavy tilt to like see it in the chart. So if you are that type of person, because I know there are of us out there, if you think you see market maker sell models, and you always be getting stopped out, it's a retracement instead of a market maker sell model, ignore that fair value gap. Just ignore it and just wait for it to give you the second stage. So like, say if you traded up into that one and then it went lower, sometimes what's gonna happen is it'll trade up into that one and then go lower and never give you an entry. And you gotta be okay with that, and you gotta understand that's the price of not getting stopped out on these. Because majority of the time it's gonna probably be just a retracement more than it is a market maker sell model. And if it is, it should do something like what true market maker sell models do. It should give you a second stage redistribution to run out the model. It should, right? That's a market maker sell model. Smart money reversal, low risk short, redistribution, second stage redistribution, run out the model, right? Again, zoom out a little bit. That right there, that I would have assumed, just early me. I'm just saying, like, early me. Like, I would assume it is a possible market maker sell model applying, but see how it did it. It created all of these other ones in here, but ultimately it was that, and I was expecting, you may want to expect it a little earlier, but when it's not. Again, this second stage distribution here is what can be seen here. And it's going to look just like that. It should trade up into a logical area, and then it should be one-sidedness to run out the model, just like that is showing right here in this line. Just like that is showing right here in this line. Boom. So I thought that was helpful. Like and subscribe. And again, as far as the information that we can be found on the daily chart, I would say just watch it, because it could be a lot. You can keep banging around, or it could trade lower. If it does trade lower, my eyes goes obviously to this low here. All right, this wick you would want to grade to and see how we how we use that level. Do we trade through those levels, or do we trade to one of those levels and then trade back up higher? And then I would look for the targeting of the suspension block again, and you would just expect price to keep banging. But if we do get below the gradient levels of this wick, you got this low here that comes in at 240.50. So I'll calibrate that real quick. And I'll also have to label it. So what I'll do is I'll just go here, sell side liquidity pool, boom, and you just want to make sure that it's populating down to all the time frames that you want it on. Boom. And it's to show you what that would look like. Look like that. And again, could be a long form market maker sell model, or we could keep banging up in there. But looking at it, we're seeing it, seeing what happens. But yeah, okay. Thank you for watching. Talk soon.